Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing that involves owing someone money and then finally paying them back. It's like that time you finally cleared your credit card debt, only this is on a much larger scale. We are looking at a Form 8K filed by XTI Aerospace, a company in the aviation industry. Form 8K filings are used to report significant events that could be of interest to shareholders. Think of it as a company shouting from the rooftops, "Hey, big news here." This report is dated April 4, 2025, but it covers an event that happened a few days earlier on March 31, 2025. So what happened on the last day of March that warranted an immediate update to investors? Scroll item 1.02 termination, quite of a material definitive agreement. In simple terms, XTI Aerospace ended an important agreement. Reading further, this agreement involves some debt. The company paid off some debts and agreements linked with the debt. To be specific, XTI Aerospace used about $2.7 million from a recent public offering to pay off debts to Streeterville Capital LLC. A public offering is when a company sells shares to the public to raise money. They hired Think Equity LLC to help with this. So basically they sold some stock and used a portion of that money to pay off a loan. These debts were in the form of two secured promissory notes, or formal IOUs, issued to Streeterville in May of the prior year. These notes were secured, meaning Streeterville had a claim on some of XTI Aerospace's assets if they didn't pay up. Streeterville released all security interests and other liens held Skrull. Now that XTI Aerospace has paid off the notes, Streeterville has released all claims on the company's assets. It is like removing a weight from the company's shoulders. This reduces risk and simplifies operations. This section simply lists the exhibits related to the filing. It's a formality that includes a digital file containing the data in a format called inline XBRL, which helps computers easily read and analyze the information. Now, let's put this into perspective. XTI Aerospace got a new influx of cash from selling stock. Instead of investing it in research and development or marketing, they used a chunk of it to pay off existing debt. This suggests a couple of things. First, that the debt was a priority, maybe because it had high interest rates or strict terms. Second, it frees the company from these obligations. It's worth noting that paying off debt can be a good thing as it reduces financial risk and improves the company's financial flexibility. However, it also means less cash available for other investments that could drive future growth. From what we've seen in the filing, XTI Aerospace seems to be in a transitional phase. They are working on cleaning up their balance sheet by paying off debt, which could make them more attractive to investors in the long run. However, they need to balance debt reduction with investments in innovation and market expansion to achieve long-term success. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.